Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're taking a look here at Bitcoin, helping you understand the big picture and best practice. And obviously, if it's going to continue higher or lower here, should we short down to 15.5 or should we take a long here in the relative near future? We're going to look at that and much more, of course. Looking at traditional markets and then some, just helping you, with the understanding of what may happen next. Now, keep this in mind, there's no exact science here. Obviously, you're probably familiar with the fact that trading can be quite tumultuous, but I can tell you that you can develop a certain strategy over the years, which me, after 17 years of constant research and analysis, I've come to find a really good, healthy system that works well for me. Again, everyone's a little different, but on the same accord, I do recommend if you are following my signals, just to make sure that you follow my bear market strategy. That's all found in the Discord over here under announcements. Furthermore, too, if you are new to the channel, keep in mind we just took 68% profit in 9 hours on the 14th. That was 2 trading days ago, as well as 108% from Ethereum on roughly the same time. We basically just bought the dip based on overextension. I can explain what I mean by that here in a moment, but generally speaking, these are the signals that I send out that are part of my community. So if you want to learn and grow as a community member, I recommend CryptoCache.tech as a site. Link in the description below to go ahead and register for that. Also register for Bitget. We have a $10,000 prize pool monthly. It's a phenomenal exchange, tremendously better than Bitget or, of course, KuCoin. Those are other two futures common exchanges, and I just recommend just using this. You get really awesome, easy bonuses there for profit and loss ratio, as well as trading volume, and again, $10,000 monthly. Right now, we are registering for King's Cup Global Invitation. I've got 12 members here registered for this invitation, so we do qualify, and we're going to see what happens when we enter group stage here soon. So awesome stuff there. Check that out in your own time. Everything's down in the description below. So here's the thing with Bitcoin. It's really straightforward. We're seeing a red day here. We got a strong rejection at 17,200. If you watched my entire video yesterday, you'd realize that. I got a couple comments this morning saying I was wrong, which is kind of funny to me because it's obviously didn't watch the whole video. So if you are, trying to learn more about technical analysis, watch the whole thing from start to finish. I can assure you, you're going to learn some things along the way, and you might actually understand the big picture, because it's always the same thing. When you look at the daily, you can see positive signs. And then sometimes you look at smaller time frames, you see the inverse as well, and you're kind of just gathering a lot of information to try to find an informed decision, okay? So at this point, it wedged up, didn't break through, so coming back down makes perfect sense as to why it did that. Constant rejection at 17,200. So that seems to be the current ceiling that we're seeing for Bitcoin. See if there's anything else that kind of communicates that as well. RSI is still low. That's fairly standard. You'd expect the price to kind of come up and try to test 50, but it doesn't always happen that way. Okay, so keep in mind, even though 50 does work as a magnet sometimes for support and resistance levels, we're far ways away from that. If the price were to increase, we would see that that resistance be somewhere in the 18 to 20,000 range. Again, we'll know more when we get there. For now, daily doesn't look fantastic. We do see some positive here, though, of course, that the momentum to the downside is starting to dissipate. So if that can continue, then we'll eventually have a convergence, so to speak, and that would be a positive sign. If we look at the moving averages, too, we can see that they are fairly far away, but also working their way down. They're at the 19,000 range right now for the 50 and the 20, and the 200, of course, is trailing right at about 22,800. So the eventual goal is for us to get over the 200-day set moving average. This is the constant downtrend, essentially, until we break back above. We may not be above that for some time. Keep in mind, even though it's coming down, the price is going down with it. Okay, it continues to hold that down. So in that sense, in the next couple of months, I think there's a likelihood we're going to break above, but I don't foresee us that happening this year based on just how unfortunate the FTX circumstances were. And unfortunately, leading into that, we were having some decent momentum to the upside, and it kind of got washed away. So again, there's a tremendous amount of fear, uncertainty, and doubt in the market right now, and you got to realize that that's not going to allow for the price action to increase anytime soon. All right, so again, daily, I would say, has looked a lot better in the past, right? So not fantastic by any stretch. Moving averages on the 4-hour were well below all three, of course, so that's never a good sign. We can see the resistance level here, once again, about 17,600, holding true with the Fibonacci circle, as well as key level supports in the past. Therefore, 17.6/17.5 is going to be a resistance area. It's going to be difficult to break through that. So please recognize that if we start trending up closer towards that, there's a good chance we'll get rejected the first attempt. As we did here with 17,200. So you can see this line here that I drew out yesterday. Strong resistance level, holding position lower. Okay, so it's holding the position of the price in a lower place, and that's all well and good. That's normal. And the reason why I felt that that was pretty consistent is the 50 on the RSI on the 4-hour, holding the price action in place. When you see that, that really helps us understand that we are still on the bearish side of things. Okay, when we're below 50 and under and above 30, we're essentially in a position where we have a bearish type of scenario. It's not necessarily a bearish divergence, but it's just a strong resistance level at a certain point, which again, 17,200 is that area because it could not pass that plane. We take a look at the MACD here. We're also losing its momentum too, and which we're soon to see a MACD divergence. Now that doesn't necessarily mean that you want to just take a short position, okay? Because you got to keep in mind that there's a lot of other contributing factors here that could cause the price action to go higher. But on the same accord, we got to recognize that it's one of those situations that when you see a 4-hour MACD divergence, it's usually going to put us in a position where the price action is going to go lower. It's like a very common characteristic you'll see in swing trading. So if we see that happening, and then we also get confirmation on the 1-hour with just say the cloud and overextension, then we can anticipate the price going lower. Okay, we'll look at that here in a moment, but for right now, there's no overextension to the upside or downside per se, so there's more room for it to run lower. Okay, so again, as per usual, if you're waiting for confirmation, we want to wait for a confirmation that the price action can go lower, in which it should, based on what we've seen here so far, and we need to kind of wait that out, or potentially short. Now here's the concern I see with shorting. If you take a look here, we are overextended to a 9 here right now for the moment. Okay. Oftentimes when you see a 9 on TD sequential on the hourly, such as this here, you'll see a reversal. We saw this here, it continued, but then eventually reversed, okay? So for the most part, you can see a common characteristic when the price hits a 9, it's going to follow suit and inevitably respond positively, or at least the other direction in which it's coming. That being said, we don't expect necessarily, even though we were to potentially see a bounce here, it seems likely, I would not expect a bounce to just shoot straight through key level resistances. It doesn't make any sense. What you can expect is for the price to bounce, potentially hit a resistance level here, for example, and then come back down further. There's potential of that as well. Okay, so to me, I think that the more likelihood here is that we're going to see a slight recovery to the upside in the immediate future. But also in the big picture, we got to recognize that the price is still moving down. So I think the macro is telling us it wants to go down further, whereas the micro, or just say the 1-hour, is overextended to the downside, and we can see it wanting to recover. We take a look at the volume weighted average price on the 15, for example. You can see how far outside of the standard deviation lines it is based on the amount of volume here. So we're seeing a tremendous amount of bearish volume in the last 24-hour period, and that's really helping us understand that the price actions, while potentially going to go lower, shouldn't go too much lower in the immediate future. Okay, so again, what comes up must come down and vice versa. So we got to just recognize here at this point that it's a very strong likelihood the price will maybe level itself out soon, potentially recover. But I would say that recovery isn't going to be as swift as we'd like. Keep this in mind though, and this is a positive here. We are making higher lows even still. I recognize that, of course, we're making lower highs here. That's not positive, but in the overall sense of things, for just say the 1-hour, for example, we can see that higher lows are still being printed, so to speak. Right? Bunny ears for sure on that one, if that makes any sense. Again, it's a reach, right? And you don't want to try to reach and take a trade based on that. So what I see here so far is that the hourly is overextended. I see a potential recovery coming here. So if you're to the long, I would have really tight profit targets for Bitcoin and whatever other corresponding altcoin you're considering trading, and then expect the price to continue to lower in the overall sense of things. Okay. So again, you want to take some quick profit. We are overextended to the downside, and the likelihood of a small recovery is high. Once again, no guarantees on that. Let's take a quick look at the traditional markets, and you can kind of see a very similar narrative here, whereas we got a gap down for traditional markets, and that is never truly a positive sign. You can see the same thing here as well with the futures, and also dollar index is kind of drawing dead in a sense. It's down, but not down enough to make that big of an impact. So, Bitcoin, again, is essentially 2x of traditional markets right now. And that happens because of the fact that the price for Bitcoin is so low that the actual percentage per day is greater, as weird as that sounds. Because typically it's a 1-for-1 ratio for the most part. Last thing to recognize too is that Bitcoin dominance is pretty much just evening out. So there's not a tremendous amount of altcoins trying to surge right now because, again, Bitcoin is bleeding. So take that how you will. But to me, I think that we're more likely to see downside, at least a potential retest of just say the 15.8 or 15.5 range in the next few days, perhaps even the next week or so, because this is kind of acting like a magnet here to the upside. And then of course, same thing happens with when it comes to the short term though. We want to see the short term essentially continuing higher. And I think that in the immediate future here, we will see a slight recovery, at least on the hourly, to continue to bounce up a little bit. I wouldn't expect amazing things, but I do think that we will see some pretty tight little targets here. So again, 16.6, maybe 16.8 would be a consideration there. So that way you get in and get out before those Fibonacci retracement levels are hit. Otherwise, just sit on the sidelines as per usual and just kind of wait this one out. Again, less signals, less opportunities right now, just based on uncertainty in the market. Please recognize that. If you are a community member, trust me, I love sending signals, but I like to make sure that they are appropriate and accurate and that they have a higher chance of success. And, just buying a random dip doesn't necessarily work out every time. So again, to me, tight profit targets if you're going to take a long position right now. Otherwise, the overall sentiment is bearish. All right, that's kind of the way it goes. All right, folks, I hope that you learned something here today. Thank you so much for sticking with me. And I hope that you watched the whole video because, again, if you don't watch everything, you're not going to fully understand the big picture. And there's a lot of things that factor in. It isn't just one specific indicator on a certain time frame. It's a lot of everything here, okay? All right, thanks again for bearing with me. Hope you have a great rest of your day. We'll see you on the next vid. Take care.